Bankers Week. After an initial reaction to Friday's U.S. mixed employment data, market participants finally realized that the labor market was still strong, which caused a sharp fall in the last trading hours. Moreover, later this month, eyes will be on the central bank's reactions on policies, which will start with RBA, BOC, and ECB meetings later this week. Besides central banks' decisions and reaction and economic data, in the week ahead, don't forget to follow the news of more lockdowns in China. Let's review the most important events and data in the week ahead with me, Ahura, and IFC Markets. Number 1, OPEC meeting. OPEC JMMC meeting attended by representatives from 13 OPEC members and 11 other oil producers will hold on Monday. While we are not waiting for any decision in this meeting, their analysis of the oil market and conditions will help us to learn what we have to expect from the OPEC minister meeting. News about the new lockdowns in China and weaker global economic conditions for now has caused a decrease in oil prices. Number 2, Reserve Bank of Australia rate decision. After 50 basis point rate hike in August, it's expected that RBA to start the next round of the central bank's rate hikes with another 50 basis point in early Tuesday. It's also possible to see that RBA drops its other extraordinary monetary policy support and raises the rates by only 25 basis points. However, both of these decisions will result in a temporary increase in OC and further decrease in the stock markets. A faster rate hike would not be a good shock for stock markets. Number 3, US ISM services. Last week, we had manufacturing ISM numbers. Both orders and employment numbers in expansion territory were better than expectations. This week, we have to watch the data from the service sector. Since many people were traveling in August and the price of gasoline had decreased, we can see good growth in this sector. The growing expected numbers can increase the expectations from Fed for more aggressive policies and pressures on the stock markets. Number 4, Bank of Canada rate decision. While it's expected to see less hawkish BOC after September meeting, this meeting is likely to see the Canadian Central Bank as one of the most hawkish banks among the G10 countries, with 75 basis point rate hike to 3.25% after a 100 basis point raise seen in July. Despite decreasing inflation in recent months, it's still so high and will likely remain too high for some time. This expected policy must lift the Canadian dollar against its crosses. Number 5, European Central Bank rate decision. Unlike Canada and Australia, Eurozone inflation seems far from being peaked. For this reason, there are significant differences of opinion between some members of the ECB Council for the increase of 50 or 75 basis points in the interest rates. The overall estimate is 50 basis points, as the risk of increasing unemployment with faster rate hike caused some doubts among policymakers. In any case, ECB is still not hawkish as other major central banks, and while the European economic situation is disappointing, it's not expected to help the euro much against its crosses. Thanks for watching this video and hope it's going to be an amazing week for all of you.